All right, let's dive right in. We're looking at some pretty wild headlines coming from two totally different parts of the market. You've got a world power making a huge move on a critical metal, and at the same time, it looks like billions of dollars are just vanishing from a major digital asset. So what if I told you these two stories are actually connected? Let's pull back the curtain and see what's really going on.
You see, we're on a mission to find the real story that's hiding just under all that surface noise. Because, the most important moves in any market, they're usually not the ones that cause all the panic. They're the quiet transfers of wealth happening right under our noses.
So these are the two big puzzles we're going to solve today. On one hand, you have China seemingly weaponizing its control over silver, which, by the way, is in everything. On the other, it looks for all the world like big institutions are sprinting away from Bitcoin. Now, these signals seem totally chaotic, maybe even contradictory, but stick with me because they share a hidden theme we're about to uncover.
Okay, first up, silver. Yeah, the headlines are screaming about price, but the real story here? Oh, it has so little to do with price. This is a story about geopolitical power. It's about who controls a resource that literally makes our modern world possible.
So, to really get this, you have to know there are basically two different worlds for silver. Here in the West, we have the COMEX, and it's mostly trading what we call paper silver, basically IOUs and futures contracts that almost always get settled in cash. But over in the East, you've got the Shanghai market. And that price, that's for the real deal. Actual physical silver that factories desperately need to build, well, everything.
Now here's where it gets really juicy. Back on December 24th, a massive, and I mean massive, $6 price gap opened up between these two markets. Physical silver in Shanghai was trading for $6 more an ounce than the paper stuff on the COMEX. Just so you know, that gap is usually like less than $1. This is a huge deal.
In a normal world, this kind of gap shouldn't exist for more than a few seconds. There's this thing called arbitrage, where traders instantly buy the cheap stuff, in this case paper silver on the COMEX, and sell the expensive stuff in Shanghai, move the physical metal, and pocket the difference. Easy money, right? The fact that a $6 gap stayed open tells you something is fundamentally broken. It is a giant red flag screaming that the physical silver just doesn't move.
So why is this happening? Well, China is playing chess, not checkers, and they have a long memory. This quote right here, it perfectly sums up their entire motivation. They learned this lesson the absolute hardest way possible, almost 100 years ago.
Let's go back in time. In the 1930s, China's entire economy ran on silver. But then, in 1934, the US passed an act that made silver prices go to the moon. This literally sucked the money, the physical silver, right out of China and completely wrecked their economy. A year later, they had to abandon their silver standard altogether. They never, ever forgot that. And now, they're making sure it can never happen to them again.
And their strategy is actually pretty brilliant. Step 1, they relabeled silver as a dual-use material. That's a fancy way of saying it's for both civilian and military use. That gives them the power for Step 2, requiring government approval for all exports. They basically installed a kill switch on the supply. And the final piece, a ton of the world's silver gets refined in China, so they already control the most critical choke point in the whole supply chain.
Okay, time to switch gears to our second story, Bitcoin. The headlines were painting this picture of absolute panic, a total collapse. But what if this whole thing wasn't about people losing faith in Bitcoin? What if it was just about spreadsheets?
I'm sure you saw headlines just like this one. Investors flee, record outflows, the smart money is out. It was a full-blown panic narrative, perfectly crafted to make you think the whole thing was coming crashing down.
And the number they used to fuel that panic was gigantic. $4.57 billion yanked out of Bitcoin ETFs in just 2 months. I mean, on the surface, that sounds absolutely catastrophic, right? But that's the thing about headlines. They almost never give you the context you need.
So let's put that scary number into perspective for a second. That $4.5 billion everyone was freaking out about, well, that happened after institutions had already poured over $46 billion into crypto products that year. This so-called mass exodus was less than 10% of the total money that came in. It wasn't a collapse. It was barely a blip.
So why were they selling at all? Well, the real reasons are, honestly, kind of boring. It has absolutely nothing to do with Bitcoin's future. It's stuff like harvesting tax losses, rebalancing portfolios to hit their targets, and managers locking in their performance bonuses before the year ends. So look, the most important thing to get here is that this isn't about conviction. It's just calendar math.
Let's just say it plainly.
This was not a panicked exodus, not even close. It was a scheduled, completely predictable redistribution of assets. Simple as that.
And that right there brings us to the real story, the thing that connects both of these markets. It's not about panic, it's not about collapse, it's about a huge, hidden transfer. The most important question you can ask isn't why are they selling, it's who's on the other side of that trade, buying it all up.
And here is how those patterns just click together. In the silver market, what we're really seeing is a transfer of control over a physical asset, moving from the paper markets in the West to the physical holders in the East. And in the Bitcoin market, we're seeing a transfer of ownership of a digital asset from institutions who have to sell because of the calendar to these huge whale wallets who are just patiently waiting to buy for the long term. This table just lays it all out perfectly. You've got silver, where the Western paper markets are selling and China and the East are buying, driven by geopolitics. Then you've got Bitcoin, where institutions are the forced sellers and the big whale wallets are the buyers, all driven by predictable calendar cycles. See the pattern?
So here is the big takeaway for you in all of this. Financial headlines are absolute masters of reporting on the noise, the fear, the panic, the day-to-day craziness. But what they almost always miss is the real signal, that quiet, steady accumulation of assets by the people who are playing the long game. So the next time you see one of those headlines that's designed to make you panic, just stop for a second and ask yourself 3 simple questions. Who is actually selling this? Who is on the other side of that trade buying it? And the most important one of all, why? I promise you the answer will almost always tell you a way more interesting and way more important story than the one on your screen.